Welcome, ladies and gentlemen. We have D. Stewart, Mr. Bobby Carter, New York Life insurance agent slash reps, or whatever you may call them. They give you that introduction when they get on the air. I'm Mr. Palmer. This is Mr. T. Small. T. Small, do what you got to do.
Man, we talking under the tree.
Sing your song. You know I'm feeling it.
Man, it's a beautiful day in the neighborhood. Won't you be mine? Oh, won't you be mine?
Won't you be my neighbor?
Won't you be my neighbor?
You're getting pretty good at that thing, I must admit.
A little bit.
You don't even read off the paper anymore.
Hey, you know what I'm saying? Freestyling.
Well, we're going to get into a very good topic that nobody likes to talk about. In this world, we have a born date. And what's the other date, Mr. Smalls?
Hey, we definitely got a death date.
We don't like to talk about that. You know, not even me, but it is what it is. So I have the direct reps from New York Life Insurance Company to tell y'all the ins and outs and what you need to do. At the end of this segment, I contacted Doug, and actually you guys gave me a blessing. Real talk. I'm not here to sell y'all nothing, but y'all did give me a blessing. You know, I'll be dead and go. I'll talk about that later. I'll be dead and gone when the blessing comes through. But hey, it is what it is.
Yeah, but you know that's a good point you made just now. Like, people think life insurance. A lot of people and a lot of people in our community think life insurance is like a waste of money.
Right.
And you got to look at it like it's not for you. Right. I mean, the benefit is not going to go to you. It's going to go to your beneficiaries.
Right.
And so once you change your mind frame and think about legacy and changing the financial trajectory of your family, you know, from ashy to classy, I mean, it makes sense. You know? Yeah.
Right.
You can't be selfish with the whole notion of life insurance.
That is correct.
Yeah.
What made you guys kind of like want to get into this? You know, you're actually helping and giving back, actually, because a lot of us in our community, we kind of brain dead about this thing. And when we do get it, we want to hide it and not talk about it. Bobby, you told me something about your story a little earlier, but what made you guys want to get into this? Go ahead, Doug, you can go first.
Well, so long story short, you know, I did radio and TV for a long time, like 12 years.
Right.
That came to an end, and I was trying to find something. I went like 4 or 5 years waiting for another radio job. It never came. A lot of politics, and so I decided I had to get back into the workforce because I was spending up all my retirement money or whatnot. And so I wanted to get back either into the mortgage industry, because that's actually what I did before radio, or, you know, I was looking at, you know, life insurance or insurance in general, sales. And one thing led to another. A friend of mine recommended, I was talking to a friend about the situation. He recommended me to someone that worked for New York Life, the company that we work for. And the rest is history, man. And I just love the industry because, one, you can make an impact, a big impact in your community. I don't know about you, but I really hate when I'm on social media and I see somebody with a GoFundMe trying to bury their mama, you know?
Right. Yeah.
And or passing around a hat or whatever. So you can make an impact in your community. You can make an above average income if you hustle, if you work. And then the last thing is you have tremendous independence in this business as well. It's sales, so you got to work. But if you do the same amount of work that you do for somebody else, for yourself, I mean, the money is going to be much bigger than punching a clock as a 9 to 5. So I like everything about the job. It's actually fun. You get to talk to people. And so, I mean, I love the insurance industry.
Right. What about you, Bobby? What made you get into this?
I've actually been in the financial services for 18 years now.
Right.
But when we moved overseas, I went into production as a wealth manager over in Abu Dhabi. And I just saw just with my dad's insurance had expired, and just dealing with that and realizing, like, in our community, we don't have those conversations about what people are supposed to do, about how to take care of like generational wealth type conversations. Like, So I knew some people who, like Doug said, passed the GoFundMe hat around. And I know some people who their parents or their grandparents had some coverage and protection, and it changed their whole lifestyle.
Right.
True ways to generational wealth. So, and I don't know if you want to touch on it now, but just organization of having certain documents so that your relatives are able to find them.
Right.
It can take days to go through everything and find everything versus if you have it just in one place. It made me think about Soul Food, where all the money was hidden in a TV that nobody knew about. TV just happened to break at the end of the movie and they find money. You'd be surprised how many clients that I've had in the past who've had situations like that where they found policies of life insurance or retirement plans or whatever type of coverage later on down the line. It's like we have to do better getting that together and having these overall conversations.
Have you guys ever ran into a situation you wrote a policy and the individual said, "Don't tell nobody," like it's a secret?
I don't know about that direct quote, but I get it all the time from men who like, listen, do not tell anybody about this because I think my wife gonna try to kill me. like my wife really gonna try to take me out if she find out about this. So I've had dudes like joke about it. I don't think I've really had anybody that was serious, but I've had several clients like, listen, man, let's just keep this, kind of low. I'm going to tell somebody where I'm going to put the policy at, and what Bobby just said is exactly true. You'd be surprised at how many stories you hear about somebody that finds a policy, months or years later, and the person that got the policy didn't tell, his loved one, his beneficiary, where this policy's at. And if you don't have that policy, you don't even know where to call. Okay. Mm-hmm. Much less have an account number or information about the person that passed away. So yeah, not really anybody that was serious and thought that someone was going to try to take them out for the life insurance money. But I've had a lot of people, have fun with that.
Wow.
Yeah.
I've had that when I was overseas.
Wow.
They did not want them to know that they had the policy. And we had to have a serious conversation. Like, if they don't know about the policy, how can they benefit from the policy?
Right.
And he was looking like, dog, I don't want her to know.
Right.
And I just think it's just that just like what you see in the movies and you hear people talk about and stuff like that got people saying that, man. That's just it don't never work out, man, like that, man. It's always good to let your loved ones know something.
Right. And then just the conversation alone about life insurance in our community. I'm going to keep saying that.
Yeah.
We are, especially where we're from. I was about to call you your nickname. Does T Smalls know your nickname?
Yeah, he do.
Okay.
Yeah.
So where we from, Poochie?
Yeah.
Yeah.
Where we from, especially, man, there's a lot in our community is superstitious. Superstition runs rampant.
Right.
And like the old people, they don't want you to talk about it because they think if you talk about it, it's going to bring it up, it's going to happen. And it's just we got to get past that as well, man. We got to get past that as well. It is what it is. Just like you said at the top of the show, as sure as you're born, you're going to die.
Right.
And there's no reason to tiptoe around that fact. And so it's tough, man. It's kind of like you fighting an uphill battle and talking about life insurance in our community.
Yes.
Yeah.
When I go back home, sometimes, I talk to some of the old people, in my head, I'm saying something different, but what I tell them is like, man, what's wrong with you? Why you think like that?
Right. Well, here's the thing. Not so much as I'm going to give an example. We know the story about the Tuskegee experiment, right?
Right.
And how they use Black people as guinea pigs for the most part. Okay. Mm-hmm. Black people financially, historically, have been done wrong with a lot of investments.
Right.
They've been done wrong in the insurance industry as well. I get a lot of people that I talk to that have had bad experience with insurance salesmen. You remember when all of us are about the same age.
Right.
You remember when you were young, insurance man came to your grandmama's house once a week, had to sign that little piece of paper or whatever.
Yeah.
But then when grandmama died, there was no money. And the reason why is because back during that time and before, they used to take advantage of our grandparents who, you know, weren't that business savvy, didn't have a lot of education or whatnot. And instead of selling them life insurance policies, they were selling them accidental death and dismemberment policies.
Mm-hmm.
Okay. That's totally different from a life insurance policy. The only way you collect on an AD&D is if you died in an accident, which the chances of that happening are less than 1%.
Right.
So a lot of people got a bad, and I get it. A lot of people got a bad taste in their mouth because when grandmama died, you know, they went to this dude that came to the house every week, smiling and cheesing in grandmama's face, and there was no money.
Right.
And so we feel like there's a stigma on life insurance in our community that, you know, they trying to get us. They always doing black people wrong, this, that, and the other, Tuskegee experiment. And so I kind of get it, but you have to realize in this day and time, it's too regulated for a company to try to get over for the most part. There's so much companies up there that's not as scrupulous as others. But in this day and time, you know, you're not going to get away with that too long before your doors are shut.
Right. I have the number one question that everybody wanted to ask y'all. T. Smalls, I'm going to post this question, and either one of you guys can answer it. Here we go.
I can talk about that.
Go ahead, Bobby.
Yeah.
Okay.
Bobby, so I've actually, you talk about it. I've actually got a couple of examples up on my computer.
Okay, go ahead.
All right.
I'll bring it in while you tee it up. The difference term life and whole life. Think about renting an apartment versus buying a house. You rent your apartment, you can stay there for 20 years. When you move out, it's over with. You don't have anything invested in it. You have to take all your furniture. There's no value whatsoever. When you have a mortgage, the payments that you make help build equity that you can take out for whatever reason, for different reasons. With a whole life policy, the premiums that you pay build up what they call a cash value. That cash value you can take out at any time, and in most cases, it's tax-free. There's no penalties to it. You can even take out loans against it if you need to. It can reduce your death benefit, but you can put money back into it at a later time if you want to. It really gives flexibility. And it's one of those ways that you can build generational wealth with a life insurance policy, because you can use it for education. You can use it to purchase a home. You can use it in retirement to pay your home off. I got a client a couple of weeks ago. She used a whole life policy to pay her house off. Her house is completely debt free. It's paid off. It's in her name. She's in her 70s. She's good to go. Now she's working. She's trying to decide if she's going to stop working or not, because she doesn't have to at this point.
So
pretty good right there, man.
Bobby explained it perfectly. Bottom line is, and a couple more, I guess, features of the differences between term and whole life. Term, you get a ton of coverage for a little bit of money. All right. And I'm going to shoot y'all straight on this show. The reason why, so for instance, I've got a 35-year-old male, you know, non-smoker in good health, for $500,000 of coverage for 20 years. With our company, it's $55.50 per month. Okay. So if anything happens to this guy within the next 20 years, he pays his premiums on time, $500,000 is going to his family. All right. The thing about term and why it's so inexpensive is because statistics show, not just with New York Life, but industry wide, that there's a 99% chance you're going to outlive the term. Okay. These insurance companies, they're in business to make money. Now, if you are that one person that passes away during that term, and when I'm talking about the term, I'm talking about the 20 years. If you're that one person that passes away during the term, it's perfect for your family because you paid very little for this policy every month, and your family's getting $500,000. Okay. Now, the other policy that he mentioned is whole life, and you hear people talking about whole life and term, and a lot of companies only sell term. They actually talk down about whole life, but whole life serves a purpose because it's guaranteed insurance. Okay. They both serve purposes, But whole life is guaranteed permanent insurance. As long as you make the premium payments, that death benefit is going to go to your family. Now, it costs in relative terms to how much term costs, it costs a whole lot more. So if you tried to do $500,000 of whole life insurance for a 35-year-old guy, it's going to be a couple of $1,000s per month. Okay, I don't even have to pull that up. But here's the great thing about whole life and how you can build, quote unquote, I'm trying to pull it up here, how you can build, quote unquote, generational wealth. Remember Bobby said it grows in value, cash value? So when you start the policy off, it grows in value. The premiums that you pay into it, it grows in value, because what insurance companies do, a lot of people don't know, they take the premiums, they pool it together with all their other clients, and they invest in the market. The difference is they've got millions of dollars to invest in the market to get bigger returns. And the people doing the investing for the insurance company are the brightest of the brightest financial people. You know, people graduated from Yale, Harvard, etc. But the whole idea with whole life is it grows in value over time, cash value, and the death benefit grows in time. Here's game. I'm gonna put you all on game. All right. A lot of our people in other communities, they know this stuff. Okay. So they'll get an insurance policy on their newborn. Mm-hmm. All right. They'll get an insurance policy, a whole life policy on their newborn. I'll give you an example. If you got a $200,000 face amount policy, whole life policy for a 5-year-old, okay? 5 years old, $200,000 face value, the death benefit, $98.72 per month, right? Okay. Now, if you continue to make that $98 payment per month, every month, when the 5-year-old becomes an adult, you transfer the policy to him, let him continue. You can do that. You let him continue to make the payments. You tell him, do not let this policy lapse. Just keep paying on it. You know, just like think about it as you taking $100 and you putting in a savings account every month, because that's basically what it is. It's a savings account on steroids. So you tell the son, you know, continue to make the payments, blah, 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 blah. When that son turns 65 years old, in that policy in cash will have grown, and I had it up here, to a cash value of $314,000. Cash. Now you can do the math. $98 a month times 12 months times 60 years. They put in $70,560 in the policy. And at age 65, when that son is about to retire, there's over $314,000 in cash in it that he can pull out and do what he wants. Now, the other side of that is, remember, the policy originally, the face amount was $200,000. Y'all follow me, right?
Right.
The policy originally was $200,000. Say the son is financially good. Okay, he reaches age 65. He's, you know, had a good job his whole life. He's had a pension, 401k. He invested in the stock market, mutual funds or whatever. So he doesn't need to pull that cash out. That $200,000 policy that his daddy got him when he was 5 years old, the death benefit has grown to $634,000. So that money goes to his son, the original purchaser's grandson. That's generational wealth.
I have to give you a round of applause, and I'm going to add on. All right. You are 100% right. I was one of them. I was a damn fool too. I knew a little bit about insurance, but I really didn't. But everything you said is affirmed, because I just received the policy. I called you about a couple of days ago.
Right.
You know, I have a daughter, and I started thinking, and when Bobby ran the numbers to me, and I would be a fool not to get that policy, to leave her some generational wealth.
Yeah.
She is the exact same age that you said, 65. And he told me what the numbers were. And I said, wow, sign me up. That's the one I want right now.
Yeah. And listen, here's the thing about it, man. Whole life insurance, or life insurance in general, is not the end all be all. You want to diversify your portfolio. You want to have different investments. Okay. you'll get an illustration. Most insurance companies, when you get a policy on a whole life policy, you'll get an illustration, and it'll show you the breakdown year after year and how much you put in and how much the death benefit should be. These numbers aren't guaranteed, but in our particular case, New York Life has given back dividends to its clients for over 150 years in a row. Okay. So these numbers are pretty accurate. Okay. It might be a little bit more, it might be a little bit less, but you have a track record on this illustration that shows year by year, based on history, how much that policy should have grown to, how much the death benefit should have grown to. So this should be just like one portion of your portfolio. Then you do, you have a savings account. You're getting, you're not getting a lot from that, but you're just saving some money. Then you have a mutual fund. Then you have some stocks, some bonds. You set up some college funds for your kids. You want to diversify. It's the whole, we from the country. It's the whole, don't put all your eggs in one basket. And, if you do put all your eggs in one basket and we hit a time like 2008 and you lose your shirt, that's not the way to go. And most people's investments came back after a time in 2008 when the market crashed. The people that were affected the most, that it hurt the most, were people that were about to retire. Like they literally couldn't retire because their whole portfolio had been diminished so much that they had to continue to work. But you want to diversify your portfolio. I'm not saying whole life is the end all be all once again, but it's a great piece to your portfolio.
Right. We have an important question. Y'all can see it's right here.
What's good about to start with a suggested amount to create generational wealth?
Good amount to start with. Yeah. That depends on, everybody's different. There's a number of different factors that go into it. That's why you really have to sit down with a planner and somebody and go over what your risk tolerance is, like what you're looking for. What are your 5-year goals, your 10-year goals, what are your goals for your retirement? What's your target retirement age? What are your goals for your kids? Do you want your kids to go to college?
Right.
Do you want to pick up a trade? Or do you, 18 years old, you don't care, they're out the house, it's really a planning type of thing. Really though, conversation can be 15 minutes. It can be a few hours. It just depends on what your plans are. And even if you don't have any plans, that's okay. You just have to start somewhere and have those conversations.
100%. Go ahead.
I got a question for you. So what about the wealthy folks, man? These folks that has millions of dollars, man. Do you often see people still come to get insurance policies, man, even though they wealthy?
Yeah.
All the time. And a large part of the reason they have this money is because somebody, set them up with life insurance when they were young.
They got it.
Yeah. And so
because I was under the impression, I was like, okay, you got these millionaires, billionaires, or whatever, man. They can't possibly need a life insurance policy, man, being that they already got money to bury themselves and carry on. When they leave, they family is pretty much they set for life. So that's why I asked that question. That's just kind of like the thought process.
Let me tell you something, man. My experience is people with a lot of money, they want more money. I'm serious, man. And
I can believe that.
It's a mindset, man. It's a mindset about making money and leaving money and, increasing the value of the family, man, when you're gone. Right. And a lot of people, once again, they look at it differently than we did. And it's, it's because we weren't taught about these things once again. You asked a question about how much is a good amount to start. The reason why when somebody asks me this question and they're looking to put a little bit of extra income into like a whole life policy, I always look at it from the perspective of the idea is you're going to transfer this thing to the child when they become an adult and they start working, they get a job for themselves. Think about it. At age 22, 23, $100 a month was, that was a decent amount of change for us,
Right.
So you want to make, I always had the idea when I was talking to a client, I don't actually sell insurance anymore. And we'll talk about that later, but I always had the idea in my mind is what was an amount that when a parent says, listen, I'm going to transfer this payment to you, you continue to make the payment. That's something that was comfortable for a 21, 22-year-old, no matter what. Like they could lose their job for a couple of months, it take a couple months to get another job, but they still can make a $75, $100 payment. Okay.
Right.
But you'll come into clients all the time. I did a policy for a client. I've done several policies for clients where they're paying, hundreds of dollars per month. And, it's really just all about your budget and what you can afford to pay.
And here's a thing about wealthy people. Wealthy people get more insurance because they have a bigger estate. You have to realize they're dealing with different estate taxes and a number of other things. So they get more insurance to cover everything that they have, from the houses, whatever debt, whatever liabilities they have. They have more insurance because they want to pass more insurance on. So they definitely, not that they stack it up, but they tend to have more than regular people.
Yeah, Bobby mentioned it earlier, but taxes is big, especially for rich people, because they get killed with taxes. Okay. And so, as he mentioned, whole life insurance, another fantastic thing about whole life insurance is it's tax free. Right. On any other investment that you name, you're either going to get taxed now, it's going to be tax deferred, or it's in the last category, tax never. The only two things that are tax never are whole life insurance and Roth IRAs. Any other investment that you talk about, mutual funds, stocks, bonds, investment properties, even money you put into a bank account, if it gains interest, you're going to pay taxes on it. You may get it deferred, but you're going to pay taxes on the gain when you try to take that money out. Whole life insurance or Roth IRAs, you don't, which is big to people that's trying to put away hundreds of thousands and millions of dollars for them to just access their money and not have it taxed. Nah, right. That's fantastic for them.
I have a question for y'all, fellas.
All right. So how long do you have to pay into a whole life policy for it to pay full benefit? Well, it depends. You have to look at the illustration. There's a cutoff period that you can see on the illustration that shows you where the money that you put in, the cash value is caught up to that amount. Mm-hmm. It's kind of like a break-even point. Right. And there's a number that's you just do the math, like I showed you earlier. $98 a month, 12 months a year for 60 years equals this amount. You can do the same thing. You can see that on the illustration as well when you get a whole life insurance policy.
Right. Last question right here.
What do you think
about the banks?
what do you think about the insurance the bank offers you? It's so cheap because, once again, it's a numbers game. It's so inexpensive, and it's really just kind of like a carrot, to say that they've offered you these products, and they're not just holding your money and taking your money and investing it in the market. But I mean, it's so inexpensive that there's nothing wrong with it. Right. I don't have a problem with the insurance that banks offer you as a part of a savings account or a checking account that you open with them. What about you, Bobby?
As far as insurance that the banks offer you, it's not necessarily the banks offering it to you, it's the company that's offering it to you. Like, what are you getting this insurance for? A lot of times we don't look at the ratings of some of these companies, which is another reason I got into this business. Like I said, with my dad, he had insurance, but it expired, and it was one of those things that should not have expired.
Right.
But, I'm not going to say the names of the company. But you have to look at the ratings of the company. New York Life, AAA rated, best rating you can get in the business. There's some companies out there you can get some low cost insurance, but when it's time to pay the piper, they might not pay or might give a hassle or a hard time when it's time to pay that benefit out. So just be mindful of the company, that it is a solid rated company that you can trust.
In other words, do your research first.
Do your research. A lot of people that you get these mailers, they're like, hey, we can give you $1 million of coverage for $8. Well, just like cars, there's a reason that you're buying an expensive car. There's a reason that you buy a luxury car.
Right.
They both get you there, but they might not get you there for the same amount of time. Right.
Bobby just mentioned something about not wanting to pay you. So, like he said, New York Life is A-rated across the board. Standard & Poor, Fitch's, Moody's, AM Best, A's across the board, been in business since 1845.
Wow.
There's companies out here that when it's time to pay the piper, like he said, that might try to fight you. It's called contestability. Especially for the first 2 years. If you want to be as honest as possible on your life insurance policy, New York Life and companies to our level, they're not going to fight you over a death benefit, but there's some companies out there that you were paying real, bottom of the barrel prices, that something happened and they're going to go back over your application. And if they can find anything to fight you on paying off that death benefit, they'll do it. They will absolutely do it. And that's another thing that kind of gives the industry, it gives a sour taste to some people about the industry, is because those companies are lumped in with all the companies. They just say life insurance. But that company is E-rated or F-rated company. Right.
You are C-rated. You know what I mean?
Right. We paid back over $10 billion with a B, to our clients in profits and dividends last year. Our company has a $24 billion surplus. So what that means is if magically all of our clients passed away today from, I hate to even say it to make the comparison to a virus or something like that, but if all of our clients passed away, we could pay off their death benefits and still have $24 billion left over. So like I tell people all the time, you're dealing with the Cadillac of life insurance companies right here, Jack.
When you guys see your clients, or Doug in the past, Bobby, you're doing it currently, you tell them the rates and they kind of give you that look. Have anybody ever made a reference with the vibe and kind of gave you a look like this or a response?
Who is you?
All the time.
Not quite like that, but all the time. Yeah, go ahead, Bob.
All the time. But that's just one of those things of where you really have to build value and reiterate. That's why, sometimes people get mad, like, man, I just want a quote.
Right.
Like, look, I'm not about just giving quotes. I'm about actually protecting your family.
Right.
You said these are your goals. Here's how we meet your goals. If something happened to you today, what would your wife do? Right. Where would your children be? Like, what type of lifestyle would they have if you're gone? If you're the breadwinner or if you're a 2-income family, once that one income is gone, how is that going to affect it? So you can't put a price on that. You just can't.
Yeah.
So
I must add on. Oh, go ahead, Doug. Go ahead.
Well, one quick thing I was going to say, in this business, once again, I said earlier, it's regulated to the tilt, but also there's an ethics issue with the amount of insurance that you sell to somebody. Like you can look at somebody's financial makeup, how much money they're making in, how much of that money do you want to replace to your family if you pass away, for how many years, okay? And so ethically, we're supposed to present that solution to you, all right? But at the end of the day, if it doesn't fit your budget, I'm of the opinion that, listen, let's get you some insurance right now. Yeah. You can add more where you don't have to, most companies, you don't have to take another medical exam, within the first year. Maybe you think about it and you come up with a raise and you can pay more into a policy, but let's get you a policy now. And then down the road, we'll try to add you some more because you need more, Mr. Customer. But yeah, definitely, let's get you some insurance on the books so your family has something as opposed to nothing if something happens to you.
And pre-existing conditions. I don't want to exclude that because a lot of people want to know. You keep hearing about insurance companies. They can't overlook you if you have a pre-existing condition. So what's the skinny on that?
You want to go, Bobby?
Well,
before you answer, if someone come in your office looking like this right here, would you write him a policy?
Yeah, it's gonna be hard on him. Yeah.
Hey, definitely gonna be some social distancing going on while you're writing.
Yes, sir.
Pre-existing conditions do not keep you from getting insurance. Okay. They might, in most cases, your insurance might cost more. Like, unless it's some extreme cases where you might get declined from some companies, but you know, everything goes through an underwriting process. That's why you have to be, you go through the application, you ask questions, ask them truthfully, you do a physical, a medical. You know, the things to look out for if you are a smoker. Doesn't matter what company you're going with, your premiums are going to be higher.
A lot higher.
That's just the way it goes. If you have some things you need to look out for, diabetes and high blood pressure. High blood pressure, depending on the company you go with. Diabetes doesn't mean you can't get it. You just, you know, have to maintain your insulin levels type of thing. Those are some things that you have to look out for. So pre-existing conditions, it's not an automatic no, you can't get insurance, but it is something that is taken into consideration. Don't let it stop you though.
Yeah. Just like I said, don't let it stop you from trying. Your premium might be higher than somebody that's in great physical condition, whose BMI is perfect, you know, their height and weight comparison. But you can get some insurance. It may be higher, but here's the thing about it. Insurance companies, and I'm gonna say this again, I think insurance salesmen, they hate when I say stuff like this, but I believe that it adds value to what we do. The insurance companies are not in the business to try to pay off $1 million death benefit to your family. They're a business, and so
right.
you're rated, and your premium is reflected by the risk that you are. Like, people don't realize that, like, not only health conditions, but when we do an application and it goes through underwriting, they ask you about your job. Do you have a hazardous occupation? Like, are you a tour guide for skydiving? Like, if you're a skydiver for a living, your premium is going to be higher. If you're a miner and you're in a mine all day digging for coal or whatever, your premium is going to be higher. If you've had this, and this is something I didn't even know before I got to the business. If you have a police record, misdemeanor to felony, you know, your premium is going to be higher, or you're going to get declined. You know, to the extreme case, you'll get declined. And the reason why, because if you have a police record, or even if you have a bad driving record, they're going to decline you. The reason is that lifestyle, whatever you did to get you put in jail, is something that you could probably get shot at by the police. Or if you got your license suspended because you were driving 95 miles per hour on the highway, weaving in and out of traffic, you are a risk. You know, your risk level goes from 2% to somebody that's healthy and never had any issues, never been in jail, or, you know, are in good health. It goes from 2% to, if you've been to jail and you eat, you know, a pound of bacon every day and you skydive every other month, it goes to 75% risk. And so the higher the risk, the more that they're going to charge you in that premium. It's just the facts. They're not in business to pay death benefits. It's almost kind of like, and this might not be a good way to compare it, because it's, you know, but it's almost like a wager. It's like Vegas almost. Mm-hmm. You know, they're betting that you're going to continue to live through this policy so that they don't have to pay you.
Wow.
Wow.
I never heard it put like that.
I mean, it's the truth. It's the truth.
Wow. I appreciate y'all, man. I mean, y'all broke it down, because when I got to policy recently, I didn't exactly know exactly what I was getting into. But when I was educated, you know, like all of us, you know, are not, it was, you know, sold to the lucky winner, brother.
Yeah,
It was a no-brainer.
For sure.
I mean, like I said, I would have been a fool not to do that.
Yeah.
Right.
But imagine if all four of us, I don't know if you guys had insurance on y'all when y'all was like 6 months old, we would have been, you know, pretty well off today, I guess.
Yeah. And I mean, you knew my old man. My old man really wasn't into insurance either, but my old man was kind of business savvy, but he wasn't into insurance. Like we really can change our financial situation in our community if we all got life insurance for, you know, children at a young age, and we had a financial literacy course when we, you know, became adults. If we had those two things, it wouldn't be overnight, but the next generation, one generation away, man, our financial situation would be eons better, bro.
Right.
Yeah.
I'm going to ask y'all my last question. I know y'all got the big insurance book. That book was about what? 36 centimeters wide. I know y'all got it.
Hey, the Bible of insurance, huh?
Yeah.
And everything is good. I enjoyed y'all, man. You know, Mr. Doug Stewart, New York Life Rep. Mr. Bobby Carter, New York Life Rep. Mr. Palmer, Let's Talk Under the Tree. Mr. T. Smalls, co-host. T. Smalls, take him out with a prayer, man.
Oh yeah, thank you, God, today for fellowshipping with these guys. I thank them for educating us on what life insurance really is. Continue to bless these guys. Continue them to allow them to share this insurance, policies with families that in need, and be a servant to them. And in God we pray, Amen.
Amen. Hey, let me say one thing. I don't know how much your show reaches in the Atlanta area, or even maybe your listeners may know someone in Atlanta, but I'm looking to hire financial sales professionals in my office, in my agency. So if you know anyone that lives in the metro Atlanta area, that's looking to change careers, start a new career in the financial services industry, or maybe someone, you have a niece or nephew that's been out of college a year or two and they're a business major and they want to get into their major, I am hiring. I mean, I can't promise I'll give them the job, but I am definitely hiring. I can guarantee an interview. Reach out to me, 678-770-8073. My name is Doug Stewart, as you see in the bottom, 678-770-8073. I'd love to talk to you about the career opportunity with New York Life.
Right. That's a blessing, man. Be a blessing to somebody always, but you always was a blessing to people.
That's what's up, man.
Oh, yeah. Y'all too. There you go. y'all always been a blessing, man. You're helping people. Let me cut this down a little bit. When you first told me about the policy, Bob, I got kind of mad because I said, wow, why did I wait so late?
We didn't know, man.
Yeah.
Don't beat yourself up. We don't know. We just didn't know.
Yeah, we didn't know. But I appreciate everybody. Don't forget to wear your mask. The coronavirus is real. Let's Talk Under the Tree is out.